All right. Fuck it. I'm going to reveal my secret trading strategy that makes me over $100,000 per month, right? With a 87% success rate. You can't show me many people that have an 87% success rate and is proving it on social media. So, as you can see by the screen, do the maths. This is bluffing, and this can't be faked. Real assets, a little something in there. None of this can be faked. And it shows you don't really need much to actually trade. All right? Cool. So, remember, guys, big disclaimer. This is my results. Everything that I say in this video is not financial advice. I'm going to give you guys a strategy. But remember, if you're playing with a small port, you could make 10% of this. Or you could make 50%, 30% with this. But imagine that. Imagine making, if I make 100K and you can make an extra $10,000 a month, just imagine, that's 10%. So if you only got $3,000 to play with in your port, then what can that do to your life to make an extra $10,000 per month? That's how you want to think it. Always understand it's about perception, right? So it's dumb shaping. As you can see, one trade, 11,000, 14,000, 32,000, 6,000, 2,000, 11,000. One thing you're going to see, remember, guys, I'm going to tell you the whole method in this video. The whole method, I'm telling you in this video. Fuck it. As you can see, two things you want to notice here. One is the success rate. I don't lose much because I stick to the strategy. I stick to the formula. Two, there's three things. Two is I don't trade much. Look at the date. This is literally 26 days. And you can see I've traded 1, 2, 3, 4, 5, 6, 7 times in 26 days. Crazy, no? All right. So, thirdly, my wins are big and my losses are super small. Because with this strategy that I'm going to release on this video, you will see that we go for the sniper approach. Not shotgun and spraying everything. We're sniper. Bam! All right? And you're going to learn it today. Okay? So, let's jump straight into the trade. So, first of all, I want you to understand some things. All right? Before I jump into the method. You need to understand the basics. And if you don't understand the basics, and if you do understand the basics, you need to go back to the basics. Because believe me, why I'm successful trading and why I'm a successful kung fu fighter. I have trained in my life. But anyway, why I pick information up quick, I understand that you need to hone on the basics. The basic wins you the fight. So understand that the market only moves in 3 ways. Okay? Up, bullish, sideways, accumulation, down, bearish. Going up, high highs, high lows, high highs, high lows, high highs, high lows, accumulation, and going down, low highs, low lows, low highs, low lows, low highs, low lows. Understand that. But then you got to understand something else. You got to understand that the market moves for 2 reasons. Okay? And then we get into the method. After this, 2 reasons. One is to induce liquidity. So just think of liquidity. 2, to revisit inefficiencies. The only inefficiencies that we really talk around here and I only really need to use is fair value gaps. All right? So, let me just show you how a market actually moves, right? Okay? In conjunction with market structure. So this is what all your gurus are saying. This is how the market moves going on. No, it doesn't. You'll see this. All right? Because if it was so easy, have a clean structure, market structure, higher lows, everybody be rich. All right? The house has to always win. And the house punishes the most. And the house punishes retail. Your mofos that's watching this, that you don't know the strategy, they're taking your money. Okay, so the big source, which is many sources, is going to come to this video, but a big part of the source is patience and wait to the market maker comes down and grabs excess liquidity. Okay, so why this happens is people would have put their buy orders here. I'm long in the market, John. This is support, John. And what happens to John? Boom! John gets taken out the game, dog. All right, cool. So that's what happens to John. And everybody puts their stop losses down here. So this is resting liquidity. There's so much liquidity here. So the market comes in, takes John and Jill's money. John cries, and people like me and my students, we're making the money because that's when we enter. Now you're going to say, okay, Christian, sounds great. Let me see an example. Perfect example here. Let's get a nice clear chart. And also, guys, remember, time is fractal, meaning you can look on the 1 minute chart, the 5 minute chart, the 1 hour chart, the 4 hour chart, whatever you want to do. But we around here, we scout, baby. We get in and out. We're not waiting around for the market makers to shaft us. No, we want to get in now. All right, cool. So let me change the color of this actually, so you guys can see better. Let's get it. Perfect. All right, guys, very simple. So this is what, once you see this shit, you can't unsee this shit. All right, so look, this is what retail mentality. This is previous resistance. Guarantee you at some point you look to the left, it'll be support. But right now it's resistance. Now look, 1, 2, 3 points of contact, and now it's become support, right? So all I want to see is 3 times support and resistance. I'm going to call it support and resistance. I don't even like that word. It's liquidity. Okay. 1, 2, 3. Okay. Now, look here. This one here, but if you see, came in, and this is where we would enter. Look, very simple stuff. Boom, boom, boom. See what happened? And it comes down, boom. So what's happening here? Let me just actually tell you what's happening so you can understand exactly what's happening. This is where people would have put their buy orders. And it works in a couple of different things, right? It's a self-fulfilling prophecy. So when actual institutions, banks, they want to place their orders and they want to buy, say, $1 billion worth of Bitcoin, they will never buy $1 billion of Bitcoin here one time because their average price would go up. You get it? If they bought $1 billion here, they're not buying it at 107. They'll be buying it at like average price, I don't know, say 109, because they're putting the price up. You get it? So what they would do is they would spend $250,000 here, right? And then when it comes back, they would put the more buys in, because they are paid by their employees, right, to buy $1 billion of Bitcoin at $107,000. So they have to always buy in parts, and then when it comes back, they'll put their more buys. But this becomes a self-fulfilling prophecy for retail. So retail will also see this as support. Do you get it? It makes sense. So yes, some people win. Like you brother say, okay, why not just buy support? Because that is gambling. Because we know at some point this is going to happen. We call this the turtle soup method. This is going to happen at some point, flushing everybody out. So why would I guess here? I don't want to wait till there's flush everybody out of the market. Right? Get it? Makes sense. So we're not playing retail games. We're playing big money games. That's why. So yeah, you could have won there. You could win there. But if this was your mindset of keep doing this, what happens when this happens? You got stopped out here. Because that today is a big dip. You'd have put your buy here and down here, 1%. You'd have lost your whole port. You'd have been stopped out. It's 1%. People use leverage. Anyway, so perfect. As it comes back up, it grabs this excess liquidity, comes back up. As it comes back up below the line, That's what you're getting. There is other little nuances that we can do, but I'm just at that point now in my trading career where I know I can see, look at the data, look at past how the candles have been respecting this line, respecting the line, respecting the line again. I know the next time it breaks through, it's breaking through and it's coming back up. But for you guys, I would definitely potentially do fair value gaps, which I talk about that in my other videos and something that we do in the mastermind as well. So also, guys, if you want to learn this from me, remember this strategy sounds simple. Obviously, there's other nuances. If you want a community, if you want to ask questions with me, one-on-one support with me, if you want signals, copy trading, and learn these methods, coaching, check the link in the description. Apply. If successful, you'll be promised to book a call, and we'll get you started. So now, simple. Now you might think, oh, but Christian, that's not much. I'm going to blow your mind to understand what's not much. Remember, we lose high leverage. Not because we're gambling, just because we have a strategy and we're scalping. Look, 1.5% move. Do you understand what a 1.5% move is? 100x leverage. That's 1.5x your port. If your port's $3,000, then on this one move, you can already make $4,500 from your profit. And imagine like me, you got a $30,000 port. Which to be honest, I've got a bigger port than that. That's just my little play money. Never keep much on these exchanges, guys. I only put money in when I'm doing my trading. All right, cool. There you go. And then sometimes if the market is just trending, you can stay in it. Like up here, you could be like, oh well, where would you take profit? Well, first of all, you want to come and look for your liquidity, your buy side liquidity. So I would have probably aimed for here. Went down here, aim for here. Doesn't have to always take it. Okay. And then here's another liquidity zone here. So these would be my take profits. I would have took profits here, and I would have took profits here. Perfect. Boom, boom. But or I could let it run. And soon as seeing a break in market structure, look, here's perfect. High highs, high lows, higher highs, high lows, higher highs, higher lows, higher highs, lows, higher highs, higher lows. Boom. Look. See? It couldn't break through this line here. So now this becomes resistance. So this is where I would have got out my my position. Okay. Personally, full transparency, I scalped this. I would have got in here and I just scalped for like 0.7%, 0.5%, just because of my port. All right. But when you see market structure like this, then imagine if you got this one. All right, you got in at this one. Then the market structure was fluent. It just went. Do you know what I mean? So from here to here, you would have left your position. Look, basically needed 3%. You just let it ride. Obviously, as soon as it broke structure here, you would have sold. This is where you would have got out here anyway, regardless. You could have run up to there. All right, guys. So believe me, trading isn't as hard as people make it think. When you've got a strategy, one, I say, is obviously the strategy of what I'm telling you now. And two, I say, is psychology. I'm telling you for a fact, you learn these two things, you will become a profitable trader.